print, email, Facebook, Twitter. More trade war averted? China agrees to substantially reduce trade surplus with the US with minutes to midnight. The great US-China trade war appears to have been averted, just ahead of the US deadline to impose a punitive new regime of tariffs. A deal of sorts has been struck, with the Chinese agreeing to take measures to reduce its bilateral trade surplus, principally by buying more US goods. There was a consensus on taking effective measures to substantially reduce the United States trade deficit in goods with China. A joint statement drawn up by US and Chinese negotiators read: to meet the growing consumption needs of the Chinese people and the need for high-quality economic development, China will significantly increase purchases of United States goods and services, the statement said. This will help support growth and employment in the United States. The communiqué was light on detail, pointing more to a détente rather than a total end to hostilities. Leading up to the talks, the US had demanded China cut its surplus by $200 billion, $266 billion, but that figure, or any other, was noticeably absent from the statement. Given that implausible target would require China to at least double its US imports, when they have been growing at less than 5% for years, it is hardly surprising. Also missing was news about the future of $66.6 billion worth of new trade sanctions and investment restrictions the US had been expected to enforce from Monday. However, a hint of what might happen can be gleaned from China's conciliatory step of halting the retaliatory sanctions imposed on around $1.3 billion worth of US sorghum shipments. China's special trade envoy Vice Premier Liu He told the Xinhua news agency both sides agreed to stop slapping tariffs on each other. He said trade cooperation would be enhanced in such areas as energy, agriculture, healthcare, high-tech products and finance, a win-win choice for both nations. The White House pointed to the Chinese agreeing to meaningful increases in US agriculture and energy exports. Markets twitchy. The weekend announcement, despite still needing a lot more detail, will probably be enough to appease twitchy markets. The ongoing trade worries saw the S&P 500 drop in late in the day, while across the Atlantic worries about a rather anti-establishment, anti-Europe coalition running Italy set markets back on their heels. ASX futures trading before the agreement was struck pointed to a fairly sour start to the week. The mood may well be far more positive when the market opens. Over the week there's some pretty significant moves across a range of markets. US Treasury bond yields hit multi-year highs, oil briefly bubbled above $80 a barrel, and the US dollar rose for 5 days straight against a basket of its main trading partners. So far, equities appear to have largely avoided being caught in the crossfire, although gold and emerging markets have taken a hit. Banks backing Royal Commission crosshairs. The Bank and Financial Services Royal Commission resumes on Monday and will switch its steely gaze away from the misdeeds of financial advisors to the big banks' treatment of small business. Looking at the guest list, the CBA looks like it is in for a tough time with 3 scheduled visits to discuss Round 3's special interest subject, loans to small and medium enterprises. A fair bit of the CBA's time will be taken up explaining why customers seem so unhappy with its Bankwest acquisition. Bank of Queensland and Suncorp will make their first appearances in the witness box. NAB, the dominant SME lender in the market, is penciled in for just one visit. Ord Minnet's banking team said this round of inquisition is unlikely to be as damaging and disruptive for the banks as the first 2, particularly from a share price point of view. The broker bases its theory on 4 points. Business credit, 50% of nominal GDP, is low compared to household credit. 105% of GDP interest paid by businesses as a percentage of profits is at the lowest point for the past 20 years. There are fewer responsible lending rules governing business lending. Australian profits from small to medium enterprises account for about 26% of major bank profits on average versus 38% for Australian retail. It may pan out that way, but the banks and investors should not discount the redoubtable senior counsel Rowena Orr, QC, and her team's ability to unearth very nasty surprises. Watching the hapless bankers being pummeled has a certain grim, slow-motion fascination, but it is not much of a contest. In the more humane world of boxing, any ref would have counted out the banks long before round 3. Construction stabilizers. Diary entries for both local and global events are fairly scant this week. Construction work done. One of the early partials for first quarter GDP is released on Wednesday. The consensus view is for a marginal lift in work after the 19% plunge in the previous quarter. The recent volatility has everything to do with the arrival of massively expensive chunks of LNG equipment from offshore. The ANZ is a little less optimistic than the average market economist on construction work. We believe construction fell again in Q1, as we return to normality following the LNG import-affected results over the previous 3 quarters, ANZ's Daniel Gradwell said. The main driver of the quarterly weakness is expected to be in the engineering sector, as the final dregs of the mining investment boom are completed, he said. On the other hand, a record backlog of work in the housing sector is likely to see residential construction nudge higher over the near term. RBA Governor Philip Lowe will talk about the importance of trade with China on Wednesday. Not his biggest worry at the moment, but should be interesting. Australia Date Event Forecast Monday 21/5/2018 Bank Royal Commission resumes. Next round of hearings will focus on small business lending. Tuesday 22/5/2018 James Hardie Fire results marginally higher earnings expected. Wednesday 23/5/2018 Construction work Q1 should rebound from big slump. For speech Governor Philip Lowe speaks on trade relationship with China. Woodside Petroleum update investor briefing. Market insights and updates on future plans. Thursday 24/5/2018 RBA speech. Assistant Governor Michelle Bullock speaks on housing. Westfield Corporation EGM shareholders vote on takeover of offshore assets by France's Annabelle. Overseas Date Event Forecast Monday 21/5/2018 US, CH. Trade deadline for list of Chinese goods to be subject of new tariffs. Wednesday 23/5/2018 US, EU. Manufacturing surveys May. Global activity may pick up again after a soft patches. Fed minutes from last meeting may give a hint whether rates will go up in June.